Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
U.S. debt downgraded, stock market going. Inflation is coming down. That's bully. JP Morgan is now accepting Bitcoin. That's also bully. So we had a big run in stocks just this last couple. Felt great, but then this last week things got choppy and it consolidating, pulling back. It feels bearish. It feels like a bear market. That's because you had such a strong run. Remember, just 2 months ago, the S&P went down 20% intraday. It had a little mini bear market very recently. We're down single digit in Protection, our flagship portfolio. But the point is, now the market's rallying and it's come all the way back, and it's actually positive for the year now, the S&P. Or it was, maybe not now. We'll find out from the team. But what is price telling you? Are you too defensive? That's emotions. What is price telling you? Now, before we dive into the markets and the mailbag, there's a couple of new articles, these Trump kids accounts that he's going to try to help for young kids. It's more flexible than a 529 plan. There's also proposing eligibility for 401ks at 18, not 21. If you're working at 18 and I think you should be eligible for the 401k. That's my opinion. It's your contribution. The company is only doing a minor match, but I'm all for that. Okay. Now, before I dive into the markets for the guys, I'm once again working remote. I'm in the beautiful Salado, Texas. It's one of the oldest cities in Texas. And I'm actually staying at the lodge at Park Place in Salado. It's awesome. There's tons of rooms here. I mean, it's a house, but it's got a few rooms and it's got right on the Salado Creek. It's just absolutely beautiful, and it's right in the center of Texas. But anyway, I just want to give you that heads up. But without further ado, I want to go straight into the markets and find out what the team is doing and what we did. Now, Don is not in today. He's actually at his son's best friend's wedding, and he still can't disconnect. He's in Mexico and he's still watching the markets. He just can't help himself. And Teddy Bull is actually in Italy. He is also watching the markets. We're getting text and emails at 3 a.m. When Ted should be asleep. He just can't help it too. He's a stock nerd. But we do have the team. We got Connor. Connor's going to run the charts and go over the market. Then Todd's going to talk about NVIDIA and actually what really could be bullish for this market. And then we're going to bring on our consultant. He used to actually work for us, but it slowed down his option trading too much. Alex Koutoudis, and he's going to talk a little bit about market psychology and an option trade we actually did. So with that, Connor, what is the markets telling us, and how should a portfolio be positioned? Because it's not your risk tolerance, it's not your time horizon, it's the market's time horizon and the market's schedule, its time frame. Okay, just if you're really aggressive, should you hold a crashing stock just because you're aggressive? No, I don't hold Revere. We don't hold crashing stocks. We have sell rules for everything. So we manage risk according to how much risk is in the market. It's different. Don't be Wall Street's widget where you're going to get where you're actually the product, and they're spreading all your money to the muni bond, the tech stock, treasuries, Chinese companies, emerging market, Europe. That's how they came up with that diversified pie charts or us portfolio. We don't do that at Revere. We have a much better way, in our opinion, to invest. If you want to learn about it, Connor, take it away.
Yep. Thanks, Dan. Yeah. So kind of go over the charts and take over for Don this week. But Dan asked a great question. What is price telling us? And price is telling us to stay bullish. I got a chart of the S&P 500 up here. And last week, we had a 4-day pullback into the 200-day moving average, which was pretty textbook. You can see this was 4 days down into the 200 and the 21-day moving average. We held that. Markets were closed Monday. And then on Tuesday, we opened up the week sharply. This was attributed to the EU tariff delay. and the market's like that quite a bit. And then you can see since then, we've just been consolidating in this flag. And kind of a scenario that we've been talking about is clearly this 6,000 level. That's the big next level of resistance to take. And after a move from 48.35, all the way up into almost 6,000, handling out and forming a flag here for the bulls is looking like the best case scenario. And we have had some volatility this week as well with some news items, NVIDIA earnings, which were quite good. Reaction was mildly mixed. And then, this morning, Trump said that China wasn't listening to the tariff, and we initially kind of gapped down. The indexes are red on the day, but again, there's absolutely nothing wrong with this action, and we're going to ride with the trend until it bends. And clearly, we have the 200-day moving average down here. The 21-day just crossed back above, which is good. We're starting to get that positive moving average alignment. The 50-day moving average is also starting to slope back up. So as a bull, the trend is clearly up, and that's good to see. And then yesterday, I talked about in the video that, yesterday was kind of day one of leaders pulling back. And I'll bring up a chart of Palantir for an example. And today, the leaders are just firing back pretty strong. And again, this is another sign that just tells us to stay bullish. Palantir's up 6.5% on the day, and this one's breaking out. We talked about this 125.41 pivot in the video yesterday, and this one's having quite a day. And this is on the heels of the indexes actually being red on the day. And we actually added to this one in turbo protection today, this morning. And then taking a look at some other leaders, Tesla, can't ask for better action from 215 all the way up to 360. And now this is just forming a 4-day consolidation, really bullish action. And then you can look at a name like HIMS. Again, this one led up through here, was super strong, and then pulled back. Again, nothing wrong with it, just got a little bit overextended, and now it's found support at the 21-day moving average and is breaking out. So, it's a very strong day for the leaders today, especially with the indexes down. And if we take a look at volatility, the VIX, this is still below 20. That's exactly what we want to see. And kind of the Goldilocks scenario that we've been talking about is leaders holding up, breaking out, indexes rising above moving averages, the ATR contracting, the S&P 21-day ATR is down to 1.37%. So this is when growth stock investing can thrive, because you get that smooth, low volatility uptrend that we've been seeing. And then today we had PCE this morning that came in quite good. And then we got University of Michigan consumer sentiment this morning as well. And that's when the market, I'll just bring up an intraday chart. We were selling off on the open. You can see we held yesterday's low. And right about here is when that University of Michigan consumer sentiment reading came in, looked good. And then we started popping up. And again, despite the indexes being down on the day, it's definitely a leader's day today with broad strength across the board. We can take a look at NVIDIA. NVIDIA is slightly down today, but again, as long as it doesn't break, the 21 and 200-day moving average, this is just consolidating fine. They had good numbers. The reaction was mixed, but again, overall, just some volatility. It looks fine. And yeah, that's kind of a general synopsis of the market action. But again, at Revere, we're trend followers. We don't put our opinions over price, and price continues on the bullish side. And we talk about what would make us bearish every night in the video and what keeps us bullish every night in the video. And currently, those facts still are still there, and we're still staying bullish until proven otherwise.
That's awesome. So can you hear me, Connor?
Yep.
So if you look, folks, that's what I was talking about right there to the left. Just a couple months ago, you literally had a 20% sell off in short order. Then you had that big rally. So everybody was freaking out a couple months ago, well, not Revere clients, but everybody else was freaking out on that big sell-off. Then you had this big rise, and it recaptured all of those losses within a few weeks. 20% was all reclaimed, right? So now this little pullback, that top right where he's showing that little cup right there showing, the handle right there, that little pullback feels huge. That's emotional. That feels like, oh my gosh, it's 12, 15%. No, single digit, 5, 6. He can tell you exactly, but all I'm saying is it feels more than it is, way more, and people will get scared and they'll make irrational decisions. I make irrational decisions. That's why I need rules to get out of my own way. Anyway, all right, man. Thanks, Connor. Now we're going to go to Todd. Todd's going to talk about what actually is this one of the catalysts besides inflation coming down and a few other factors, consumer confidence. Todd's going to talk about a few of the market participants that are really tipping the hat in favor of the bulls. Todd?
All right. Great job, Connor, stepping in for Don. And let's start off with NVIDIA. Connor touched on it a little bit here. Connor, just pull up a weekly chart on NVIDIA to start with, just to show kind of the recent action for the last year. Going back to almost a year back, this thing's really just been in a consolidation from last May through current. And, it's about a 40% gyration from highs to lows here, just to put NVIDIA into context. So really kind of been chopping sideways for about a year. And then going to the daily chart, a little bit of a disappointing earnings reaction yesterday, about a 30% move from the lows, the April lows to the recent highs. And the big move really to get it back above the 200-day on May 13th, when, it had the first initial move above the 200-day. That's some new news here where Saudi Arabia committed over about $100 billion to build data centers throughout the world. So really, NVIDIA's kind of been a laggard up to that point. And if you look at really when it started and its first real accumulation, that's when it all started. Now, again, a little bit of a disappointing reaction on the earnings. Gapped up, ran into resistance right at that old $143.44 area from February, and naturally is backing off as it's still building, and all the moving averages are starting to realign, and the 21-day moving average is now starting to come back above the 50-day moving average. So again, not necessarily the leader, but definitely a stock everybody's following, and it's been trending back nicely above its 200-day moving average. Really, the leader in semiconductors is probably AVGO, which has had about a 70% move from that low to that high, versus a 30% move in NVIDIA. And this one's just a few percent away from its all-time high. And they report earnings next week. So again, similar action with the general market, but much better shape and much better relative strength and closer to its all-time highs. So we'll get a gauge also on the earnings picture next week with AVGO. And one of the things NVIDIA noted in their quarter is there's been a huge move from training models to inference now. And basically, you can think of the training phase as the model's learning, and inference is the doing phase, where the models are actually producing results. Everything from self-driving to coming up with real applications and real data. And AVGO plays a big part into that movement into the doing phase of the AI networks. And this has definitely been the standout in this rally. But I'd just like to end, Connor, are you able to do a comparison chart of all the key names? I want to throw 5 names out. Let's see if it comes up on the screen. And if it doesn't, we'll just end it here. Yeah, so let's put on GEV on that list. Let's put on NVIDIA. And let's do AGX. And let's throw CRWV in there, Connor. Okay, and you can see that out of all the stocks in the AI area, that's all I wanted to show. It's really kind of the real standouts in the recent rally off the bottom have been GEV in the power generation area, AGX, which is the builder of power plants and data centers, CRWV, which is a new upcoming IPO that really is involved heavily with NVIDIA, and AVGO, which is moving now toward that inference phase of the data center. So that's how we're looking at this. And, these are the standouts that are doing better than NVIDIA in the AI data center area. And that's it, right. Connor. Thank you.
All right. Thanks, Todd. So folks, here's the bottom line on that. So remember a couple months ago when we had that big sell-off, that was actually the AI stocks, the data center stocks, because all of a sudden it looked like there might be overcapacity. You had that DeepSeek scare a while ago. All these little things. And that's really the sector of the markets that got in trouble and got hurt, that pulled the market down, the whole market. Now that particular sector is now leading out of the gate. And so that all those data center stocks, and he's right, the build out of them has come back in favor versus the chip makers, but still it's that whole tech sector that actually could ignite this rally big. And especially if you get either positive tariff news, but we're getting good consumer sentiment, good inflation numbers, you're getting fundamentals are looking pretty good. So just because the market felt last 2 weeks, it actually appears to be setting up for a rip, snort, and rally. Question is, what are you doing? And if it turns around, we got rules to get out. That's why that's important. It makes it a lot easier to invest. You don't have to go through these big boom and bust cycles. All right, let's go to Alex Koutoudis. Alex, a Greek. Alex is going to talk about trading psychology because he's a professional trader, trades options. So Alex, go for it.
Yeah. So one of my hobbies is I race cars on some track events. I do time attack, time trials. And if anybody knows about racing, there's a lot that goes into it, especially psychology wise. And I thought there were some parallels with trading. I have 5 points I just wanted to go over real quick. You have to know the art of when to throttle down and when to hold back. And in trading, that, there's times when you should be pressing the pedal like now, and there's times that you should be letting off the gas and pulling back a little bit on your aggressiveness. Number 2 is doing some type of portfolio review, whether it's on a daily basis or weekly basis. And that's similar to how cars need to come into the pit stop and be checked in on, check their brakes, check their fuel levels. You need to check your portfolio. Luckily for you guys, especially Revere's clients, we do that on a daily basis. Studying the track is important. Knowing when the turns are, knowing when the straights are, is the same as understanding what's the market temperature. Similar to rotation gauge. If you don't know what's going on in the market, how are you gonna trade properly and know what stocks to pick? Same as like racing. When are you gonna take your turn to hit that apex? Number 4 is you have a lot more risk when you're going 200 miles an hour than when you're going 50. So similar to your weight, if you're all in and you're 100% invested, there is more risk. So are your brakes in order, like in racing, or your stops in trading? So you can't just go 200 without making sure you have good brakes, because you need to have a stop. Number 5, last one, don't go overboard and get too hot, because you may crash. And you've heard of horror stories in trading where people go overboard and they have 50% position in one stock, and there's some news event that happens or a downgrade and the stock gap's down 30%, and then they're wondering why they're down on the year. Similar to racing, don't go overboard. You may lose control and spin out off the track. So I thought those were an interesting analogy, and figured I'd share with you guys. I saw some parallels. Next, I just want to go over one options trade that popped up. It was more of an alert that I didn't take the options trade itself, Dan, but Connor had pointed out to me, and it actually helped Revere because Revere was in Hood during this time. So back in early May, there was a day where someone big was buying the July 60 calls. And at the day, I think that day was like $2.5 million worth of one strike on 2 months out, which is really obscure and rare. So that was kind of a sign that someone's trying to either get a position in or protect their downside. Don actually was buying that day, and Don bought for Grow another day after that and was in it as the alert happened. So we kind of like letting Don know, hey, something's going on here. I think you're in the right name. We could see some upside. And then look what happened. Hood went up another 20% in like a month. So if you see, like, options can not only be used just for like an options trade alone, but if you have a stock position and you see something like that, that could be a good sign that you're in the right name, because options lead the market. They're tells and signals that can be help you alert yourself that, hey, or for the downside, if you see a bunch of put contracts, something might be off and your stock's extended, that might be a sign to maybe take some down. That's it for me.
Absolutely.
Short and sweet.
That was awesome, Alex. That's a great point. So, folks, let me put my Alex interpreter on what he's saying for that options contract. So we saw this option trade on Hood where people are buying calls. They're going long. They're betting the stock's going to go up, but they're only 2-month option contracts. They're not They're not a year out. They're not 6 month. They're not like a longer term. You're bullish on that stock or buying and hold. Not option, don't really buy and hold, but longer term. 2 months means something's got to happen big within 2 months. So normally on a huge volume contract like that, you either got just some big wealthy gambler that's just taking a shot, doesn't really, or it's someone. I'm not saying people don't ever trade. I mean, or someone knows something. I mean, don't think that people don't trade on inside information. They're not supposed to, but it happens occasionally. And even if it's not, if some analyst or some big hedge fund has really done a deep dive and realizes something is coming up quick on a contract or a sale, I mean, a lot of things, that stock could really rock. But when you have that large of a contract in that short a time period, somebody believes that stock's going to move pretty quick. So it's really kind of a confirmation indicator. You don't necessarily trade on that, but you're right. If you're looking around for a stock and you've already got that, or you're picking between 2 or 3, and you look at that, this one has the most options call contracts outstanding in the short term, that tells you some big money is bullish on that. So that's why. So you don't have to. There's more way. I mean, we have an option strategy with a few clients that really understand options well. Don't really do it that much, but you can actually use options stocks as well. They're very good indicators. So thanks a lot, Alex. That was awesome.
No problem.
Listen, folks, at Revere Asset Management, we're the most transparent advisor in the world, I think, but at least the country. I mean, we're doing daily videos every night the market is open. The team is putting in a 10-minute short daily market insight video going over the short-term, long-term, mid-term of all the indices, stocks, moves we made in our portfolios, stocks we're bird dogging, and we're doing that every night. Do this podcast once a week, normally on Friday morning, and it goes out right away. If you're on YouTube, just go to YouTube, just type in Revere Asset and subscribe. Zach will probably have this out by 1 Central Time. You'll have it 3 hours before the market closes. That's what our stock nerds do. And then if you go to just revereasset.com, go up in the right-hand corner, there's a subscribe button. Put your name and email address in there. Make sure it goes in. And you'll get this podcast delivered to you on Saturday mornings. There's 2 ways to get our content. You can either do it through our email blast from our website, revereasset.com, or at YouTube. Just type in the search for Revere Asset and hit subscribe. Folks, don't be a pie charts or us. Learn a better way to invest. We'll talk to you next week on Your Money, because it's your money, not their money. And as Don always said, it's not what you make in the markets, it's what you keep.